insight. I want to bring in Kevin Green, senior markets correspondent, help set up the action today. KG, all right, we come back, got you really busy as soon as you come back. So where we are with regard to China and the U.S., how would you characterize the latest?
Yeah, obviously, as you kind of talked about, it's a news-driven market, and China's remarks yesterday and overnight here are actually very interesting because you kind of see a little bit more pushback coming from them. It seems like they're really kind of digging in, and I think the market probably is underpricing the fact that this could actually be a long and drawn-out process, especially if those tariffs are actually going to stay in place. Now, obviously, President Trump kind of softened his tone around them, but if China does come back with some of the stronger rhetoric, you have to wonder, what is the president really going to, how is he going to respond, and how are the markets going to be able to take that? So right now, everything is focused on China. We are trying to recover here, Diane, but if you kind of look at yesterday, we had a nice little push to the upside to start the day. We still ended up green, up around 1.3% on the S&P 500, but you started to see a fair amount of stocks actually fading. And so the technical landscape here, hitting a critical area of resistance, kind of signifies that maybe we need some more good news in order to push us higher, because if we don't have any news, or we have negative news, it seems like the market might be trying to sell into these rallies, which rightfully so. If you want to take risk off the table and the dynamics continue to change, that might be the appropriate strategy.
So do the sellers control the action right now, or do the buyers at this point?
It depends on the the time at the end of the day, right? It depends on the tweet, and it depends on the Truth Social post. I would say right now, what you're seeing as far as these green days is a lot more short covering taking place, and it's hard to really try to short this market right now because you never know what's going to actually be provided by the White House. But I think if you kind of move up a little bit higher, you get to that 5,500 level. Technically speaking, it does look like an area where some short sellers can try to come back in and knock this market down. The buyers right now, they are trying to find areas of opportunity, but what makes it a little bit difficult this time around is a lot of these mega cap names, especially if you're looking at it like an NVIDIA, are really kind of in the crosshairs here. And if we are going to tighten the screws more on China in order for them to get to the table, unfortunately, the mega cap names are probably going to be the ones to provide that leverage, as we saw with some of the news last week with NVIDIA and potential recertifications of licenses that are pretty extreme when it comes to the pricing of those licenses. So I would say cautiously optimistic at this point in time here, but we may not be out of the woods. And I think that's reflected by the VIX, which is sitting at around that 30 level, which is somewhat elevated right now.
And then what are your thoughts on where the dollar is? And I mean, we've seen some stabilizing with regard to the dollar. I mean, it's still below 100, but what are your thoughts on where that is?
Yeah, stabilizing, I think, is the best way to put it right now. I mean, we had some counter trend rallies where the dollar over the last couple of trading sessions here, but now we're trying to contend with that 100 level if you're looking at the dollar index. And so not only are we, seeing, obviously, I don't really think it's so much of a flight away from the dollar, but maybe pricing in by some currency traders that some other economies might be able to fare a little bit better over the near term here. And that's because a lot of them have experienced downturns or got very close to recessions like the UK or even the EU, which they're policies are starting to become a little bit more lax compared to the United States here. So we're trying to recover here, but I think stabilization is going to be key for the dollar. It's not so much where that dollar level is. It's just the low volatility for the dollar is going to give the equity market traders a little bit more confidence that they can kind of navigate out the valuation metrics. And I would say the same thing when it comes to the 10-year treasury, which is kind of sitting at around 4.3% here. Once we get to around 4.5, 4.6%, that's probably where you'll see some stress in the markets. And so we want to have both of them trade in a very tight range for now. And I think that gives you some confidence that maybe some stability is creeping into this market. But once again, the headlines can shift on a dime, and that makes it very difficult for not only intraday traders, but swing traders that, you go to sleep with one narrative, you wake up with a different one, right? It's kind of difficult right now.
I mean, part of that is, essentially also the time difference you have between the U.S. and China. So our overnight is their morning. Let me ask you about levels you're looking for on the S&P 500, and I also want to get into Texas Instruments earnings. So we finished at, 53.75 on S&Ps yesterday. What are you looking at for the upside and downside from here?
Yeah, for the upside, looking at 54.50. Once again, that's been a key area of resistance that we've seen over the last couple of weeks or so, and that also kind of coincides coincides with around that resistance level for the 20-period moving average, or the 20-day moving average, which right now is sitting at around 53.84. To the downside, you are seeing some flows at 52.15, rightfully so. I don't think the commentary from China is really not conducive for a bull market right now, and so we are seeing some downside positioning here. So upside a little bit smaller when it comes to that range compared to the downside, which it's pricing in another 150 points to the downside right now for the S&P 500 for opening at these current levels.
Okay, and then let's take a look at Texas Instruments shares rallying right now in the pre-market. Catch people up on the latest results here.
Yeah, for Texas Instruments, going into this very low bar, they've had some issues over the last 2 years or so when it comes to earnings. But this earnings announcement actually did exceed the street's expectations here. We had the adjusted earnings per share coming in at $1.28. Street was looking for about $1.07, and revenue did come in at $4.07 billion. Street was looking for $3.91 billion. That's around 11% increase on a year-over-year basis. Now, they did actually note that all segments actually grew on a quarter-by-quarter basis, except for personal electronics, and that's actually a bright sign, because they've had some issues with their own customers really not backfilling their orders, which has created a glut, which has also pushed prices lower, which has also pushed margins lower here. But their guidance moving forward is also fairly optimistic right now. They're looking at Q2 2025 revenue guidance between $4.17 billion and $4.53 billion. She was looking for around $4.12 billion. And the adjusted earnings per share estimate between $1.21 and $1.47. Street was looking for $1.20. So they're giving an optimistic view here, but they did highlight that the uncertainty with tariffs could actually impact them in the second half of this year. And Texas Instruments has around 20% of their total revenue coming from China. Now, given the fact that they don't have really advanced chips so much that's going over to China, they might not be impacted as much, but it's something to kind of keep on the radar here. But low bar, seeing a nice little pop to the upside here. They have readjusted their CapEx spending plans over the next couple of years as well, which is exactly what investors wanted to see. And it seems like a lot of the cost-cutting measures are starting to be reflected when it comes to margins.
Do you think with regard to, I know it's a low bar that it cleared, especially for Texas Instruments. So far, it's had a difficult year. Is this, like, in your view, kind of a one-off move that we're seeing?
Not so much. I mean, you see the same type of situation happening with Lam Research, which once again, fairly low bar here. I think the sustainability of the second half earnings are going to be the big question, and we just won't see that for a while. So you might see some buyers trying to step in, maybe looking for some perceived value in the tech space, which Texas Instruments trades at a pretty decent discount compared to some of their competitors here. But the landscape can change on a dime, and so right now you could be optimistic, but this could also be a setup where they provide really rosy guidance, and unfortunately, maybe some of the dynamics change and they have to re-rate that to the downside, similar to what we have seen with airline companies, where they're singing a different tune from what we heard in February to what they're seeing right now.
Yeah, so it's a very different tune from the airlines, and we'll get into that more later in the show. All right, that's Kevin Green, Senior Markets Correspondent. Thanks, KG.